shares in Asia were mostly lower on Monday as investors closely monitored developments on the U.S.-China trade front. China's Ministry of Commerce said that the economic and trade teams in the two economic powerhouses held constructive discussions in Washington, with both sides agreeing to remain in contact. On Friday, stocks slipped after the Chinese delegation canceled a visit to U.S. farms, dampening expectations of a trade deal being reached. China's Shanghai Composite fell 0.98% to about 2,977.08. Hong Kong's Hang Seng Index shed 0.57%. South Korea's Kospi finished largely flat at 2,091.70, while the S&P ASX 200 in Australia closed 0.28% higher. Overall, the MSCI Asia X Japan Index shed 0.15%. Markets in Japan were closed on Monday for a holiday. In Europe, stocks closed sharply lower amid dismal economic data from the region and the collapse of one of the world's well-known tour operators. In particular, German private sector activity shrank for the first time in 6.5 years in September as a manufacturing recession deepened and growth in the service sector lost momentum. Market's flash reading of composite German PMI came in at 49.1 in September, down from 51.7 in the previous month. The manufacturing PMI was particularly troubling, coming in at 41.4, which was the lowest gauge of German factory sentiment for more than a decade. Meanwhile, the British tour operator Thomas Cook announced it had collapsed, leaving thousands of holidaymakers stranded. The tour operator's failure has put 22,000 jobs at risk worldwide. The firm was unable to secure a rescue package from its lenders. Meanwhile, U.S. stocks closed with little changes on Monday as weak economic data out of Europe stoked worries over the state of the global economy. The Dow Jones Industrial Average gained just 0.1% to 26,949.99. The S&P 500 ended the day just below the flat line at 2,991.77. The Nasdaq Composite dipped nearly 0.1% to 8,112.46. On the data front, the U.S. manufacturing sector hit a 5-month high in September, while the services sector grew at its fastest pace in 2 months. As for individual stocks, Amazon shares declined 0.4% after Morgan Stanley lowered its price target on the e-commerce giant to $2,200 from $2,300. American Express rose 1.2% after the company authorized a buyback program of up to 120 million shares. The company also hiked its dividend by 10% to 43 cents per share. In currencies, the dollar was mixed as European currencies were on the defensive, while the Japanese yen gained, reflecting risk-off trends in the global financial markets. The euro-US dollar slipped to 1.0965 and finished below the 1.10 handle amid the contrasting economic data from the Eurozone and the US. While the European numbers pointed to a recession, the US manufacturing activity data showed the economy is still in good shape and continues to grow. The US dollar Japanese yen dipped to 107.30 and closed at around 107.50 on Monday, extending losses below the 100 DMA. Early on Tuesday, the pair is making recovery attempts with the prices challenging the 107.70 intermediate resistance on the way to 108.00 as risk sentiment seems to be improving somewhat amid the reports that China has been given new waivers for tax-free purchases of U.S. soybeans. In particular, China grants tariff waivers for U.S. soybeans imports of between 2 and 3 million tons and also grants several domestic firms new tariff waivers for U.S. soybean products and imports. In commodities, Brent crude slipped to $62.50 and closed around $63.40 on Monday as Saudi Arabia said it would restore its crude oil production soon. The market remains very sensitive to the signals from the country after its crude oil production declined by over 50% as a result of recent attacks. Early on Tuesday, Brent remained marginally above the $63 handle and could regain the upside momentum should risk sentiment continue to improve. That is all for today. Thank you so much for watching, and please make sure to subscribe to always be in touch with the latest market news.